Good afternoon. This is Valerie Leonard. I am the founder of Nonprofit Utopia. I want to say thank you so much for joining us. As you may or may not know, we are focusing on finishing strong for the end of the year. And today we're going to focus on all of those reports that you need to file, between now and, possibly the next 1 or 2 months. But you usually start gathering the data and start completing the reports during your fiscal year end. We realize that not everyone has a fiscal year ending in December, but December 31st still signals significant activity for year end, as it relates to fundraising. And it's always a good idea to take stock of where you are in terms of compliance. All right, so without further ado, I am going to share my screen, and if you can just bear with me. Alrighty, so as I indicated before, we're going to be talking about year-end compliance for nonprofits. And before we go into that, I just want to talk about who really cares about nonprofit compliance. Nonprofit compliance, obviously, you care as one who runs a nonprofit or is a nonprofit manager. If you are looking to work for a nonprofit, you want to make sure that the nonprofit that you're working for is sound financially, right? So when we talk about compliance, we're talking about the reporting that needs to be done to government agencies as well as to the foundations and any funders. Those of you who have been solicited by organizations for year-end contributions, obviously you should care about whether or not they're in compliance, because you want to make sure that any donation that you give is tax exempt. Folks who work for GuideStar, they care about compliance because one, they're going to take whatever information that you are filing with the IRS and post it on their website. And it'll be very, very telling if you have not completed your Form 990s. So speaking of Form 990s, just so you know, in lieu of paying income taxes, nonprofits need to file a Form 990. It's an information return and not so much, it's not a tax return. All right. However, you have to um, divulge much more information than you or I would on our income tax forms. All right, so it's basically sharing information about what your mission is. It talks about it gives a financial summary. It also gives disclosure of who your board members are, and you can use this as an opportunity to share some of the highlights for what you've been able to accomplish as an organization. The Form 990 is due within 5.5 months of your fiscal year end. So if your fiscal year end is United States calendar year, which is December 31st, you have until May 15th to file. If your fiscal year end is in June, then you have, 5 months from June. I believe that's in October, but count 5.5 months from your year end, and that's when you need to file. All right. Every organization has to file some form of Form 990. And here are the various forms of Form 990. We've got the postcard, and those are for organizations that have budgets of less than or equal to $50,000 a year. All right. I would recommend that even if you're eligible to do the postcard, that you don't file the postcard. Why? Because whenever you file a Form 990, that information is going to GuideStar and other agencies that track this kind of information. It um, goes to the IRS as well as other organizations, and you can go to your page, right? And when I say your page, I'm talking about your particular organization's page on GuideStar, and you can see all the filings that you have made for Form 990. GuideStar takes this information and they make reports, so to speak. They put it in searchable databases where those people who are a little bit more sophisticated can do searches of organizations that have certain criteria, and they can look to determine who they want to give money to. And if you only have the Form 990N or the postcard on file, they don't have any information for you. It looks almost as if you didn't file. All right. Those organizations that have gross receipts or gross revenues of $200,000 or less than $200,000, and if they have total assets of less than a half million, they can choose to do the 990EZ or the Form 990, and there are instructions. Notice with the postcard, there are no instructions. And then if you have gross receipts greater than or equal to $200,000 or total assets of greater than or equal to a half million dollars, then you should do Form 990. And if you're a private foundation, you have to do the Form 90 PF. All right. And I think it's important to know too, to let you know that if you are in the process of doing research on different foundations and what's important to them, how they spend their money, and who they gave their money to, you should go and look at the foundation's 990 PF. That will give you a really good sense for, what their views and history of giving to organizations that are similar to yours. So, as with anything, any report that you haven't filed on time, there is a penalty. All right. So, organizations that file the postcard, I mean, those are those organizations that have revenues of $50,000 or less. There is no penalty. Organizations that have revenue under $1 million, they're subject to a penalty of $20 a day. And get this, for each day the return is late, and for every return. All right. So up to a maximum of $10,000 or 5% of the organization's gross receipts, whichever is less. All right. And then those organizations that are above $1 million, they're subject to an even higher penalty, a penalty of $100 per day, up to a maximum of $50,000 for every return that's late. All right, so you have to file, just like with your income taxes, you have 3 years legally to file. And with nonprofits, if you fail to file for 3 years in a row, you automatically lose your tax exempt status. And that's critical. Once you lose your tax exempt status, it's extremely hard to get money. Foundations can't give to you because by law they have to give to tax exempt organizations, right? Or a fiscal agent that is tax exempt. And then people in the community aren't going to want to give to you because they're wondering, if you can't file Form 990, how else are you managing your organization? What else are you doing incorrectly, right? So the first thing you want to do if you lose tax exempt status, and usually before you lose tax exempt status, there is a warning. You'll get a warning from the IRS letting them know that you haven't filed for 3 years in a row. They'll give you the list of penalties and interest that you owe in order to make everything go away, right? But if you're past that point and you have actually had your tax exempt status revoked, you don't panic. You have a choice. Either you can go through a process of trying to have it restored, or you and your board can talk and you might, determine that it might be, better off for you to dissolve. All right. But whatever choice you make, you want to have an educated decision and, have people to go back and forth. And you might, consider working with an attorney and or an accountant who understands nonprofit organizations, not one who has only worked with for-profit organizations. All right, again, don't panic. You want to make sure you explore all of your options. You want to communicate openly and honestly about what happened, why it happened, right? And then think of ways and mechanisms you can put in place to make sure it doesn't happen again. So these conversations need to happen internally first between you and your board and upper level management, right? And then you're going to need to file all the back returns, pay any penalties, any interest. I suggest very strongly that you work very closely with an accountant and an attorney who has a relationship with the IRS as it relates to working with nonprofits. They might be able to work with you to do a letter of abatement so that all of this goes away, right? You also want to develop board and financial operating policies, to one, document what the procedures are to do the filing, right? So this becomes a part of your day-to-day operations, at the appropriate time to do filings. You might consider doing a calendar of every filing that you have to do, including your Form 990s, right? And then after you do that, you would write a letter to the IRS, complete a letter of abatement. It's a form that they have, indicate to them what happened, share with them your plans for making sure it doesn't happen again. And if you guys decide that you want to stay in business, right, and just weather this thing through, you might consider getting a fiscal agent, right? And you want to make sure that whoever that fiscal agent is has a strong record. You want to make sure that that fiscal agent is not going to be in competition with you, but yet they have similar goals and objectives. And again, if you have any questions, any comments, please post them in the chat room and I'll get to those, as soon as I'm done with the presentation. All right. So once you have filed Form 990, and let me backtrack. Forming File 990, you really should do that at the same time that you're doing your year-end close with your auditors and or your CPA. If you're getting an audit done, financial audit, then you should have your auditor complete the Form 990 at the time he or she is doing the audit. And make sure too, at the state level for Illinois, you have the Form AG 990IL. That is the state of Illinois' filing form. And whatever state you're in, every state is going to have different requirements. So go to your Attorney General's office as well as your um, Secretary of State's office and or their Department of Business Services and find out what the annual reporting requirements are. So in the state of Illinois, we have to file this Form AG90IL, and that is the state's counterpart for the Form 990. And the filing fee for that is $15. And if you're late, it's $100 for every return. And the reason why I'm bringing this up is, believe it or not, there are organizations that have been in operations for years and years and have not been made aware that they actually have to complete Form AG 990IL. So in those cases where you suddenly find out that you're responsible for filing this form, you are going to be subject to a $100 late fee, right, for every return that you have not filed that you in the past that you're filing now. And basically, the Form AG 990 is, giving a sense for what the financial performance is, just like with the Form 990 on the federal level. All right, so the next on the list is your withholding taxes. And paying withholding taxes, you only have to file withholding taxes if you have employees. So you do that on a Form 941, which is the federal form, and it's a quarterly return, right? So you're going to include the employee share as well as the employer share of FICA taxes, right? So remember, this is withholding, and you're showing the amount that you have withheld from each of your employees' paychecks. But you also have to include the employer portion of it. So any organization that has $2,500 or more in taxes per quarter has to file of Form 941. Not only do you have to file, but you have to make deposits, right? So there's two responsibilities. One is to file the form, and the other is to actually make payments, right? And I strongly suggest that I don't care if you only have one employee, that you get a payroll service, because this stuff gets really, really complicated, right? Even though it's not rocket science, it's really a pain, and it's very, very easy to forget to file. It's easy to make a mistake, even though it's a relatively simple form. Alrighty, so the taxes that you have to deposit are the income tax that you withheld from your employees, the FICA, which is your Social Security and Medicare tax that you withheld from your employees, and then you need to also include, the employer share of those taxes. All right. And again, you have to remember, not only do you have to file, but you also have to make deposits. There are penalties for not reporting, and there are penalties for not paying. All right. So Form 941 is used to file federal quarterly payroll taxes. Some people do this once a year, but I would strongly suggest that you do this quarterly. And you use Form 941 to report the wages that you've paid, any tips your employees have received, and that is only applicable if you're a nonprofit and you have, say, a restaurant or something like that. Any federal income tax that you withheld, and both the employers and employees share of Social Security and Medicare taxes. So this is a screenshot of the Form 941. And then after you file your first Form 941, you got to file a return for every quarter. And this is, from here on out until either you go out of business, right? And even if the people are no longer on payroll, you have to file. So if your payroll is zero, you still have to do Form 941. All right. And the exemption is if you employ farm workers, seasonal workers, or domestic workers, and that doesn't apply for nonprofits. All right. And the Form 941 is due on the last day of the month that follows the end of the quarter. So if the first quarter ends in March, then your first quarter 941 is due April 30th. If your next quarter ends, say, June 30th, then the second quarter 941 is due July 31st. All right, so if you mess up with Form 941s, you are in deep trouble, right? You have to pay penalties and interest, and the rate for interest is set quarterly, and typically, at least in years past, it has gone from 2% to 6%. And then on top of that, there's a 10% avoidance penalty that's going to be assessed, right, when the deposits are not made on a timely basis. All right, so this chart is basically sharing an example, a penalty on a $3,000 underpayment or failure to pay, right? So if you're late by 1 to 5 days, then you have to pay a 2% penalty. If you're late by 6 to 15 days, then there's a 5% penalty. 16 or more days, there's a 10% penalty. And then more than 10 days late on the first bill is 15%. So you get the sense that the IRS takes employee taxes very, very seriously. Why? Because you are, in this case, a fiduciary. You are being, you're charged with making sure that the employees pay their share, right? You're withholding from them, and the IRS is expecting that you're not profiting off of those taxes you're withholding from them, that you're actually going to do the right thing, and that the employee is not left holding the bag, right? So here's an example, again, a penalty on $3,000. All right, so if you have underpaid by $3,000 or you owe $3,000, the rate, the penalty is 2% or $60 after, between 1 and 5 days. And between 6 and 15 days, the rate goes up to 5% and you would owe $150. 16 days plus is 10% penalty and you would owe $300. Anything more than 10 days after your first IRS bill is going to be 15% or $450. So you can see how quickly this expands. It's almost exponential, right? The amount of money that you have to pay on, just for not filing on time, not paying on time. All right. So this is, the first one, the chart at the top, that's the number, that's the penalty for late payment, right? But if you fail to file, it's 5% per month of the unpaid tax on the due date, reduced by the amount of the failure to pay penalty for the same month, for a maximum of 25%. And then if you fail to file, then it's 0.5% per month of the unpaid tax, and then 1% per month after the notice of an intent to pay, for a maximum of 25%. So look at this, 25% failure to pay, 25% failure to file, on top of these late fees. So there's a strong incentive for you to pay on time. There are organizations as well as businesses that have had to go out of business just over, not filing Form 941. So just like with the Form 990, there is a federal and state component. With the Form 941 for your payroll taxes, there is a federal and state component, right? So you pay your state taxes, state withholding taxes, at the same time that you pay your taxes on the federal level. So anyone who has employees, so if you pay wages or salaries, you are subject to um, IL 941. So again, taxpayers who are required to pay monthly or semi-weekly have to file quarterly. So again, you're filing this at the same time as you do your Form 941s on the federal basis. All right, so the penalties at the state level, you're going to owe a late filing penalty if you don't file a processable return. So when we talk about a processable return, we're talking about a return that doesn't have any errors. If there's missing information, if there's erroneous information such that they can't file it in time, then you're going to be subject to a late payment penalty, right? And then on top of that, if you have a bounce check, you're going to have a bad check penalty of $25. All right, so the penalty for late filing, there are two tiers. There's tier one, which is the lesser of $250 or 2% of the tax required to be shown due. And if the return is timely filed but can't be processed, remember, you have to make sure that the information they have is complete. You have 30 days to correct the return before the penalty is due. If you filed on time, but there's something that keeps them from actually processing, right? And then tier two, if you don't file a return within 30 days after receiving notice of a non-filing, an additional penalty will be imposed equal to the greater of $250 or 250 or 2% of the tax shown due. The additional penalty may not exceed $5,000, and then the penalty will be assessed even when there's no tax due. So remember, once you start filing 941s, even if you don't have anybody on payroll, you're going to have to continue to file them, until the organization goes out of business. All right, so the penalty for late payment, so if you're late by 1 to 30 days, it's 2%. Anything over 30 days, so you could even that could be a 31-day month, right? But anything over 31 days late, you have a 10% penalty. All right, so if you have any questions, feel free to post. All right, so there's the form CO1, CO2, and CO3, and these forms are returned to, and this is for the state of Illinois, to our Attorney General's office, right? So if you live in a state other than the state of Illinois, I strongly suggest that you check with your Attorney General's office as well as your Secretary of State. If you have anything that's similar to a business office, an Office of Business Affairs or something like that, then you should check with them and find out what forms you need to be filing on an annual basis. Now, in the state of Illinois, typically Form CO1, CO2, and CO3, these are filed when you start your organization. However, there are people who have been in operation for years who didn't know that they had to file these forms. They thought that, once we file with the Secretary of State's office and let them know that we're in business, that's it. But the truth of the matter is, not only do you have to file with the Secretary of State's office for your articles of incorporation, you have to file with the Attorney General's office and let them know that you're in business and that you are fundraising. So these are basically putting the Attorney General's office on notice that you're engaging in fundraising so that they know that you're in a system in the event that something goes wrong, right? And they know to send you reports, annual reports that you should complete. So if your organization is a startup, you complete Form CO1. If your organization is less than 1 year old, then you do CO2. And if you're one of those organizations that's been around for a while, you're going to have to do CO1 and CO2. And if you are a religious organization, then you do Form CO3. And remember, if you are a church, you're not subject to the Form 990 and AG 990, but this Form CO3, they want to at least know that you are in the state of Illinois. All right. So you also have to make sure that you're registered with the Illinois Department of Revenue, and that's done on Form Reg 1. And again, organizations kind of forget about this form because they think that the only form that they need to concern themselves with is the articles of incorporation that they file with the Department of Business Services here in the state of Illinois. And then they also think that because they're tax exempt, that they don't really have to have any interaction with the state of Illinois Department of Revenue, right? So that couldn't be further from the truth. When you start your organization, when you start your new business, whether it's for profit or nonprofit, you have to complete Form Reg 1. And what this does is put the state of Illinois on notice that you are in business. All right. So regardless of whether you're for profit, nonprofit, or you're a corporation, sole proprietor, you have to complete this form. You also have to do the UI1, and this is to register you for unemployment insurance. If you are a nonprofit in the state of Illinois, you don't have to pay, and you don't really have to fill this form out until after you get 4 employees, and that's only for nonprofits. If you are a for-profit, then you need to complete this form as you're completing your business. And I would strongly recommend that even though you don't have employees right now and you're a nonprofit, that you actually complete this form because you're not going to always remember that magic moment when you all of a sudden have 4 employees, and then you'll be subject to paying unemployment taxes. All right. So nonprofit organizations are liable for unemployment insurance taxes for the year that it has employed 4 or more people during each of the 20 weeks in a given calendar year. All right. So again, you're not, if you're anything like me, you're not going to remember that magic moment when you get 4 employees. All right, so every quarter, just as you're doing your Form 941s and then your IL 941, so remember as you're doing your payroll taxes, another form you're going to need to complete is your unemployment tax reporting. And that's going to be on Form UI3/40. All right. So, these are the wage reports that you have to file, and this helps the state of Illinois to determine what your unemployment insurance rate is going to be. All right. So you do this once a quarter, and again, you do this on the same schedule. 1 month after the quarter in, you should have this form in. All right, late reports and remittances personally delivered will be subject to penalty and or interest. An employer who has paid no wages during a quarter but has not permanently ceased being an employer, so either you decide permanently that you're going out of business or you're deciding permanently that you're not going to have payroll, right? You got to file a signed report showing, you're not paying any wages for the quarter. Nonprofit organizations and local government entities which elected to make payments in lieu of contribution must file the contribution and wage report UI 340. You have to do it quarterly, even though your contributions aren't required. All right. So the penalties for late filing, the quarterly contribution and wage report, again, this is for unemployment insurance. They can range from $50 to $5,000. Unpaid balances accrue interest at the rate of 2% per month. And in some cases, they do this on a case by case basis. They can waive the payment of penalty and interest. It's going to depend on, what circumstances led you to not filing the report. And I'm sure it will also depend on what your revenues are. You can apply for a waiver within 30 days of the date the IDS mails your notification for that you're delinquent. You got to show good cause for your late filing and pay the full amount of past due contributions. You also have to let them know, whenever you hire new people so that they can monitor and make sure that you're paying the appropriate amount for unemployment insurance. And you have to share their name, address, social security number, as well as the hiring date. And then you have to give the name, address, and federal employer identification number for your organization. All right, so if you have any questions, you can go to ids.gov, and then you can send the information by fax at 217-557-1947. And by this time, you should probably be able to report the new hires online as well. All right, so who's eligible? In the event that you find yourself in a situation where you're starting to pay unemployment claims, the workers should have earned at least $1,600 in wages during the past year or within the past 12-month base period, right? So this could be the first four of five completed calendar quarters, right? And then they have to have at least $440 of that $1,600 earned during the quarters other than when the earnings were the highest. And workers who have been awarded temporary total disability benefits may have their base period determined differently. All right, again, you should go to the IDS website as well as call them and get further guidance. And then you should also know that workers can be ineligible for benefits if they quit a job without good cause, if they're fired for misconduct, or if they're involved in a labor dispute. Benefits can be discontinued due to physical inability to work, failure to adequately search for work, mental inability to work, or unavailability to work. All right, so if you're eligible, claimants can receive up to 25 full weeks of regular benefits during the year after they file a claim. And during periods of high unemployment, additional weeks may be authorized. The amount of benefits paid depends on the amount of wages earned during this base period. All right, so from time to time, your payroll may be subject to audit from the state, so you got to make sure that you keep your payroll records for at least 5 years. They're really more permanent records, but keep them for a minimum of 5 years so that in the event that you're called for an audit, you will have the paperwork with you. All right, and this is really important. People like to serve on boards, but often they forget that, or they may not even know that whatever happens with an organization, the board of directors is ultimately legally responsible. right, is not the executive director unless he or she is part of the board, right? But the board, no one board member is going to be singled out, right? The whole board is going to be responsible. So now, if the organization doesn't pay the unemployment taxes, if they don't pay payroll taxes, then they can be held responsible personally, right? The Unemployment Insurance Act was recently amended to provide for the personal liability of any officer, any employee of an employer who has control, supervision, or responsibility for the filing of reports or the payment of contributions, payments in lieu of contributions, penalties, or interest for the employer. And if you willfully fail to file the reports or willfully fail to make the payments. All right, so again, there are consequences for failure to pay the unemployment insurance. All right, so if you fail to file a report or if you fail to pay any contributions, the department is going to be looking to corporate officers and or other individuals responsible to make the payment. Again, this is another reason why I think it's important to have, a payroll service, right? Because this stuff gets to be really, really complicated. And you really, if you're anything like me, you don't want to be dealing with all of this quote unquote stuff, when you have a business to run, pay the professionals and let them do this for you, right? So if the payments aren't made, you can have a lien on your home, you can have a lien on your car, your boats, and other property and levies on personal bank accounts, right? So if you want to have more information on that, you can go to ides.illinois.gov/taxes and reporting. All right, so the next thing we're going to talk about is exemption from sales taxes. And I want to say up front that just because you're a nonprofit does not mean that you are exempt from sales taxes. In the state of Illinois, you need to register in order to be exempt from sales taxes. And if you are an economic development agency, it's going to be very hard, if not impossible, to be exempt from sales taxes. But if you qualify, right, for the first time applicants, you're going to need your articles of incorporation, you're going to need bylaws, you're going to need the IRS letter of determination, you're going to need your most recent financial statement. And as I said before, the religious organizations are going to be exempt, because we have the separation between church and state. You also want to share a narrative that explains the purposes, the functions, and activities of your organization. And then you also want to have any marketing collateral. So they want to get a sense for the nature of your business to see if it really qualifies for a tax exempt purpose other than, those organizations that are dealing with, excuse me, those organizations that are dealing with community and economic development. All right, so if you're up for renewal, you're going to need a copy of your current exemption letter with the E99 number on it. And and when I say exemption in this case, we're talking about exemption from sales tax. And, once you get that, you have an E99 number on it. And then you're going to have a copy of your articles of incorporation. And if you're not incorporated, then you need to have a copy of your constitution, a copy of your bylaws. You also need a brief narrative of your purpose, a copy of your IRS letter claiming your federal tax exempt status, any brochures, and your most recent financial statement. And don't get this mixed up with your bank statement, but your financial statement. And it doesn't have to be an audited statement. Just make sure that it captures your revenues and expenses for the organization. And if you do have those audits, it's always a good idea to share them. But if not, don't worry. All right, so they have gone from a situation where you write the letter requesting tax exemption, sales tax exemption, to now they have an online form. It's called Form Stacks 1, and you can apply online for sales tax exemption, or you can download the Stacks 1 form. And here's something that is often overlooked, the NFP 105.10, right? This is for changing the registered agent. I, I can't emphasize how important it is to make sure you let the state of Illinois, or whatever state you're in, let them know that there is a change in the registered agent. This could be critical. In the event that you're sued, or in the event that the state is sending you mail asking you to provide reports, in the event that the IRS is sending you mail telling you to file your Form 990s, you want to make sure that this is going to the correct address. So you want to complete Form NFP 105.10. And you also want to, in the event that the registered agent is resigning, you want to complete Form BCA hyphen 5.15 NFP 105.15. All right. So the change of the registered agent, letting them know it's going from this person to that person. And if someone has resigned, you need to let them know. All right. And then you have the nonprofit annual report. So this is a report that goes to the Secretary of State on an annual basis. And this is basically letting the state of Illinois know who's on the board, right? And this report is due before the first day of your anniversary month, right? So if the date that you incorporated was September 15th, the anniversary month is September, and your annual report is due before the first day of September. So it's due in August, right? So failure to file an annual report can result in involuntary dissolution of the corporation. So it's a very minor report, but you can see it has huge, huge consequences. A lot of organizations in the state of Illinois have been dissolved, and this is organizations for profit as well as nonprofit, for not filing this form. All right, so if you have any questions, feel free to post. I'm going to check the questions now. Oh, wow, okay. All right. Robert, I'm sorry, I didn't know what you were referring to when you said that might be better in this, in this climate, right? All right. And again, the Form 990EF, I'm not quite sure. If you can just clarify, if you're still there, what you mean. And Robert, that's true. The federal government and the state government does have checks and balances. So I think what Robert is getting at is, you've got to be careful and consistent. Whatever you say to one government agency can easily be checked out by another agency, right? So the information that you put on the grant form versus the information you are filing with any department of revenue. All of that stuff can be cross-checked, and if there's any discrepancy, you will have you will have someone contact you. All right. Robert also says competition is good. I agree. It's good as long as it's healthy competition and not cutthroat to the point where people are doing unethical things to put other people down. Um, okay. Is it a problem in the black and brown community filing? I say, you know what, the problem is universal, but I will say, and I will agree that the problem is more prevalent in the black and brown community. We might not always have access to the same level of information that other people have, but truth be told, this is a huge problem across the board, but probably more so in communities where you don't have quite as much information about what goes on with nonprofits. For I did have a table for the number of organizations that were filed that we have in the United States that are nonprofit, and I believe about a third of them in the United States has a problem filing. They have lost their tax exempt status just for not completing Form 990. And Bill, if you're still there, thank you. It's great to see you. Bill is a long time friend of mine. He's also an attorney in the state of Michigan. And if he says that this is good information, then I'm feeling really blessed. Bill doesn't suffer fools lightly. No, Robert, I did not talk about indemnity insurance. I'm focusing today on compliance, and I think that might be a pretty good topic. Maybe we can get some insurance specialists on to have them talk about indemnity insurance and why that's important. All right. And I think those are all the comments that I'm going to share on screen. Before I go, if you have any comments, if you have any questions, please let me know. I want to say thank you so much. Thank you so much for spending, just a little bit of time with me during your holiday to learn about, the filings that we have for nonprofits. All right. All right, so without further ado, I am going to let you go, and we're going to be doing these live streams from now until the end of the year. So that means every day we're going to be talking about some facet of what you should be doing to close out the year end. All right, so I shall see you tomorrow, and thank you much. Take care. Bye-bye.